So why am I happy when MSTY has a red candle for today? We're going to go over that along with MSTR and Bitcoin, as Bitcoin did move up a little bit today. But to end the video off today, we're going to talk about SPY, as I sold an option on SPY and made more money in just one day. Hello my friends, this is Legend. So today we're going to talk about MSTY, MSTR, and Bitcoin. But the one I'm most excited about is the option I sold on SPY today that not only made me some premium, but it also made me a little price appreciation. So we'll cover that toward the end. But before we get started into looking at MSTY, if you enjoy this type of content, make sure to hit that like button, as it would be much appreciated. So on MSTY here, we have a red candle, right? And normally that would be a bad sign. I prefer the green, of course, but why am I still happy even though it's a red candle? And I'm going to zoom in just so that you can see. And there we go. Yes, it is a red candle. And yes, we are still sitting really close to our support line here. But what is significant about this candle that at least puts a little smile on my face? One reason and one reason only is the fact that after that distribution came out, and that close of yesterday's candle was 1161. And how much did we get in that distribution? Well, that was 21 cents. So we can use our calculator right here, and we can do that 1161 right here. And we can subtract off that 21 cents, and that gives us $11.40 would be the new price for MSTY after that distribution is taken out, right? So what did we close at today? $11.53. So that's a 13 cents recoup that we just got back after that distribution came out of the price of the stock. Because today is the X date, and on the X date is when the distribution comes out of the price of the stock. So since it closed at 1161, that means that that 21 cents will come out of the price, and that new price would have been around $11.40, and that would have been the value of that drop from that close of yesterday, right? So the fact that it is at $11.53, that means we've already recouped 13 cents out of that 21 cents. Now that is what I'd like to see. If we can get all 21 cents of that back before the next distribution, that would be wonderful. That's what we need from MSTY. But we are still sitting really close to that support line down here. And that support line I've got at 1143. We did break down below it today down to 1131, but we did not close there, right? We did pop it back up and ended up closing at 1153. So that's one good thing. And like I said, I'm just happy that we are getting some of that distribution back. And I hope that we can continue getting that distribution back. And hopefully by tomorrow, we recoup all of the rest of that distribution. So I'm going to flip it over to the adjusted chart so we can look at the indicators here. And there we go. All right, so I'm going to turn the MA off, and I'm going to turn on the Bollinger Band. And I'm going to hide the lines. As you can see, we are on the bottom half of that Bollinger Band, and that RSI2 is still low, but it is not below the 10. So for me, it would not be a buy, but since my real price per share is way under $11.53, it's not going to be a buy for me at all until it gets paid off, because I only have about 50 cents left, and that is not counting this latest distribution. Now I'll update my spreadsheet and we'll see what that new real price per share is and see what I'll be looking for in the following weeks. But if you had a real price per share that was above $11.53, say your real price per share is $14, then by buying at $11.53, that could bring down that real price per share. But do you just continue to buy every single time that it's under that real price per share? Well, you could, right? Because it will bring it down. But better yet, if you can catch it whenever it drops below that 10, like it does right here, then that could potentially give you a better buy-in price, right? Because unless you just have endless amount of money to keep buying every time it's under your real price per share, then you're going to run out of money, right? So you have to be a little strategic about it. And therefore, I buy whenever that RSI 2 is below 10 here, and when it's at the bottom half of that Bollinger Band. And I prefer at the bottom side of that Bollinger Band. As you can see, that's where it's sitting on this day. So that would have been a good day if that price would have been below your real price per share. But again, that's just how I'm doing it, because in my mind, if you're going to buy above your real price per share, then all you're going to do is average that up. And for these high yield ETFs, I don't necessarily like to average up. Even though that would increase your share count, I prefer to have it work in two ways for me. I would prefer to buy so that it lowers my real price per share, and the distribution I would earn would lower my real price per share as well. So I can get it twofold that way. But you have to make your own decisions, and you are the CEO of your portfolio, so you have to make those big decisions on your own and do your own research on these ETFs. So now let's just go ahead and take a quick look at MSTR. And here we are on MSTR, and I'm going to turn back on my lines here. As you can see, we are still really close to that support line. And I've got that support line at 279.29, and we did peak past it, but then closed up above it. So we have not broke below it, as we would have to have that candle close under it. And then for a full breakdown of it, it would need to have a full candle, wicks and all, under that support line. But just poking through, and as long as it closes up above it, not a problem, right? Because it's not going to be black and white, right? It's not going to be, it cannot go below 279.29, period, right? It's not going to be like that. It could move a little past it, or it may not even get down to it, right? Either one, you can still consider that it is respecting that support line. But until you get that full candle under that support line, it did not fully break down. And same thing goes for a breakout if you're looking at a resistance line. It's just the other way around. That full candle would need to be above that resistance line for it to have a confirmed breakout. So right now, I think we're sitting right here at this support line, and we need to keep it above that 279 area, and hopefully we can. And I think we can if Bitcoin can continue to move on up. Now, as you can see on Bitcoin right here, we got some sellers up here because you got that long wick on top, right? And you have this previous support line, which is now a resistance line, right, at this 109.7, and that's about exactly right where we're at currently. So if we can get up above this, close above it, and then hopefully for the next day open above it and then stay above that 109.7, and therefore that would make it a support line. And then we can use that support to help us move on up. And we need that on Bitcoin so that it can help push MSTY up. You can see on the momentum bars, we are decreasing on that negative side. That's a great sign. And check out the MACD. We are tightening up on that MACD. It's getting close, and it actually looks like it wants to turn up a little bit on that MACD. And if we can turn up and then cross over that signal line, that would be wonderful. And then we can hopefully get enough momentum and start moving to the green side on that momentum side, and then move this thing on up. But with all that said, I am glad that for MSTY, we were able to capture 13 cents back out of that distribution that came out of the stock price itself. Now let's just slide right over to SPY, and that's the one that I am most excited about for today. And here we are on SPY, and I've got the 5-minute chart turned on right here. You can see right down here 5M for 5 minutes. So each candle is 5 minutes, okay? So when this thing opened, it opened at around that 668 area. Now, if you remember from my previous video, I was assigned those shares, and if you remember, it was at 668. Right? So I own 100 shares of SPY at 668 per share. And why is that? Well, that's because I had sold a put that got assigned. And for doing that put, I had made some money in the premium for selling that put. And since yesterday it did close below that 668, and we're looking at the day chart here, you can see right there, it closed at 667.80. So therefore, that put that I had sold, stating that if the price closed below 668, I would be assigned 100 shares at the price of 668. Well, it closed at 667.80. Therefore, I was assigned those shares yesterday, right? So they showed up into my account, and I saw them this morning, and I had 100 shares at 668 average. Now, flipping back over to the 5-minute chart, you can see that it did actually end up opening at 668. And it looks like about 668.15 to be exact. So it opened right there about what I had my shares at. Okay? Now, did I go ahead and sell that call since it was just slightly above my purchase price of those shares? I did not, right? I could have sold one probably immediately at 669, made some pretty good premium off of that, and moved on, right? But I did not do that. I ended up selling my call at 671. And why did I pick 671? Well, pretty simple. Remember yesterday I had drew in my lines here. I did the red line here, and here's yesterday over here. This is yesterday's candles. I drew a red line at the low of yesterday, and I drew a green line at the top or the high of yesterday, right? So I had my range right there. So when it opened at 668 for today, and it started moving up, all right? Now that top line up here is sitting at right close to 672, okay? And that's the high of yesterday. As you can see, those candles, they were moving up, and it got to about as high as 670.73 and then started tailing off, right? And then it started moving back up, and it broke that high right here. And then it tailed off. And then it went up, and it broke that high there as well. So this thing was moving on up. Now, I was not sure if it was actually going to get this high, right? Because of this right here. It was going up, and then it fell hard, right? So I thought, well, I might end up having to sell it around 670 or something like that. Maybe I can sell a call then. But I was just patient. And it doesn't always work out, but in this case, it did. So had this kept on moving up, then I probably would have tried to sell a call around 672, okay? Because early in the morning, I can still get some really good premium for selling a call at a higher price. I still wanted it to break that 671, right? I just wanted it to break that because the top or the high from yesterday being right at 672, I thought, well, if it can break 671, which is just under it, then I can sell my call at that 672 and make some good premium. And if it closed above it, great. My shares get called away and I'll make that nice price appreciation. But it went up and it started falling back down. And then it was having trouble getting back up to this point, right? And when it did break right here, it started peaking right over that 671 right here. So I started looking, but then it fell back down. And by this time, it's getting a little late in the day, right? It is now getting around 12 o'clock. So what I did is when it peaked up past it, I went ahead and I looked to sell that call And I figured, well, I'll just do it for 671 because it's having some trouble breaking past it, right? So I'm thinking I'll sell a call at 671. And if it does break past it, it's probably going to hang out here somewhere because it's got that resistance line right here at 672. So I'm thinking it's just going to hang out right in here. I can get my shares called away and make that nice price appreciation. So I ended up selling that call at 671 and I was able to earn $1 per share times 100 shares. So that's $100 just in the premium. And you can see right here is my receipt. You can see the SPY 671 call for October 23rd, which is today. So that is a day trade for one contract. And each contract is worth 100 shares. So this contract has a total number of 100 shares. And how much did I earn? I earned $1 times 100 shares being $100 just for selling this call. So whether this thing goes through or not, if it stays under 671 here, then it just expires worthless. I keep the $100 no matter what, but I get to try to sell a call again tomorrow. But if it does sell above it, then my shares will be called away and I can look to sell a put the next day. So you can see that I did in fact earn that $100 today. And that was around $12.55. So I can move my candle over here at $12.55 right there. So like I said, it was bumping it and then it fell down. So when it actually broke through it once again, I went ahead and jumped on and I sold an in the money call, meaning that the price was actually above the strike that I selected. Because as you can see up here, that price is about 671.20 or 671.30 right in this area, right? I sold my call at 671. So that earned me $1 per share in premium. And when it went through, that went ahead and that credited me $100 into my account. And just shortly after it went through, it fell. And I thought, wow, did I time that just about right? But then it just popped right back up and then was using this as a support, this 671, and eventually bounced off of it and then broke that 672, right? I thought, well, dang it, I left some money on the table. But you can't worry about leaving money on the table because if you do worry about that, you'll never make a trade. You have to decide on a strike and then just stick to it. Now, you can pivot and you can make those changes as needed, but you got to make a decision because if you just keep trying to get every little penny, every little dollar out of it, you'll never make a trade. So as you can see, it was above it. So I thought, well, I'll end up selling at 671 and it'll close around 672. That's all right, right? But what did it do? It started coming down. And I actually, on this candle here, it dropped as low as 671.30. I thought, oh my goodness, this thing's going to come down, close right below my 671, and it's not going to take my shares. And then I'll have to look to sell a call tomorrow, which would not be a bad thing, right? Because I made $100 today, and then I can try to sell a call tomorrow, make another $75 to $100 on that call, hopefully, and still be looking to make some price appreciation if it would be above my purchase price. Right? But it did close above my 671 call right here. So therefore, they will take my shares. And what do I get for them taking my shares? Well, I earned that premium of $100, plus I get the price appreciation, and that's the difference between 671 and 668. And that's $3, right? And that's $3 times 100. So that's $300 for that price appreciation plus my $100 in the premium. So that's $400 just today alone. And that doesn't even count for the premium I made yesterday for selling the put, right? So a very nice day in the market. Love selling calls. I love selling puts. And in a way, I'm kind of doing the wheel strategy on this SPY. I'm just doing it on a day-to-day basis almost. Now, I don't necessarily do it every day, right? Because the market's not always going to give it to you. You can only do what the market is going to allow you to do, right? Because if it's not going to move up and you need it to move up, then you're just going to have to wait and be patient. And if you need it to come down and it's going up, again, you have to wait to be patient. But you do have to decide and make a move eventually. So super excited about SPY, right? Making $400 in one day. That is awesome. I'm going to have to start a spreadsheet for just doing my day trading here on SPY because I'm very curious how much I'm actually getting off of this, and percentage wise, what is that on a yearly return, right? Now that would be an estimated yearly return, but what would that forecast look like? That would be very interesting to see. I'm going to have to create a new spreadsheet, but I will do that because I am very interested to see what I can do on SPY here. Because as you know, the previous call that I ended up selling and put, that whole trade was about $900 last time. So this can be very profitable. And why I am not too worried about SPY, even if it did fall. And I'll show you why I'm not too worried. And this is why right here. As you've seen on previous videos, I look at the 5-year chart and you can see that red line, that's a 200 MA. And that's a 200 moving average. And that's what the EMA stands for, moving average. And that means that the candles here are staying above it. Therefore, this here has a nice trend up. And yes, it could come down. And it could come down a bit, right? But history shows that it moves up and to the right. So even if I get jammed up and I'm stuck holding it, right? I may be at a price up here and the price of the stock could be down here somewhere. That's okay. Eventually, if history repeats itself, it will get me back up there. And I could still sell a call. It just may not be for a day. I may have to shoot it out a few days or a week, right? And that's the good thing about SPY. You can sell calls and puts on a daily basis or as far out as you would like, right? There's a lot of liquidity in SPY, so therefore you can use SPY as a daily option trade. So I'm super excited, but I am going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button. It would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.